Hello and welcome to another video by the Philomaths. In this video, I'm going to talk about the differences between the two main types of accounting, financial accounting and management accounting. To understand the difference between financial accounting and management accounting, let's take an example. Suppose you are making a decision of whether to buy a car or not. To make that decision, you're going to look at your bank statement to see where you spend your most of the money, what is your saving potential, and hence make a decision of which car to buy and when. All the information that you use, which is available at your disposal and which is internal to you, can be classified as a management accounting information. These information help you reach a decision as and when you want to make that decision. Now let's say you have deliberated upon the decision to buy a car and you've decided that you would have to approach a bank for a loan. The bank would ask you for a certain set of information in a certain format to be supplied to them so that they can make the decision to lend you or not. The information that you supply to the bank can be now thought of as a financial accounting information. There is a little difference between the two information sets. In management accounting, you will use all the information available to reach a decision. Whereas in the financial statements that you submit to the bank, you will carefully scrutinize and selectively provide only those information that are mandatorily required by the bank. These are the main differences between the two systems. Let's look at few other differences between financial accounting and management accounting. Financial accounting is a more general purpose report. That means it complies with a certain template which is required by the regulation. In major geographies, all companies have to provide a balance sheet, an income statement, and a cash flow statement. The items in each of the statement are standardized by regulation, and hence it is general reporting purpose in nature. Whereas a management accounting information doesn't have to comply with any reporting format or a template. They can be produced as and when required by the management to make a decision and in the format that would help them make the decision. Few examples of a management accounting information and report could be cost volume profit analysis, a budgeted statement, etc. In financial accounting, information is mostly aggregated in nature. For example, if you look at an income statement of any company, you will find the item cost of goods sold. Now this item encapsulates all the costs spent in the manufacturing of all the products that the company produces. It is very difficult to entangle which product among the wide variety of products sold by the company attributes to how much of cost or profit. This information cannot be estimated or interpolated from the financial statements. On the other hand, management accounting information is very detailed. It can be detailed for a product, a department, or for a timeline. For example, we can have a cost volume profit analysis for one product out of all the products the company makes, and hence a decision can be reached as to what is the break-even point and hence a margin of safety for a given product. Financial accounting information has a fixed reporting interval. Depending on which geography the company operates in, the regulatory regime will define whether the company has to produce a report every quarter, every semi-annual, or every annual. Sometimes it also depends on the size of the company. The bigger your company, the more frequent would be your reporting requirement. On the other hand, management accounting does not have any reporting regime. This is primarily because this information is used internally, so it only concerns the internal stakeholders in the business. For example, the manager, the owner, or the CEO. It is reported as and when the company needs to make a decision, and hence it can be quite flexible. Financial accounting is also a backward-looking approach. Let's say if you're looking at a statement dated March 2020, it only tells you what has happened till that point in time. Although it might be very tempting to make a forward projection using the past information, the forecasting ability of financial information, because of its aggregated nature, is very low. On the other hand, management accounting information can be used both for backward as well as forward-looking approaches. It tells the manager what has happened, and because of the forecasting element built into it, it can offer some perspective of what can happen in the future. Hence, it is more useful for decision-making purpose. Financial accounting information is also subject to a variety of regulation. Depending on where the firm is operating, it might have to follow the US or the UK generally accepted accounting principles and the international accounting standards. Sometimes these regulations are also sector specific. For example, banks have to follow the Basel Accord and insurance companies have to follow the solvency principles. Management accounting, on the other hand, because uses information which are internal to the organization and doesn't go beyond a certain people who make a decision, there is no outside requirement of complying to a regulatory regime. There are also no audit checks on the management accounting information generated. Lastly, financial accounting information has to be more objective and verifiable. All numbers reported by the company are subject to audit, and if there is any error which is material to the organization, then there is a lengthy and costly process associated with restatement of those figures. Companies can also incur financial penalties for misreporting information. Management accounting, on the other hand, can be less objective, less verifiable, but it has to be accurate in nature. Setting up the objectivity and the verification process can be time-consuming. Sometimes a ballpark figure obtained as quickly as possible is more useful than an accurate estimate which takes a long time to come. I hope you found the content of this video useful. For more learning, connect with us. You can subscribe to our YouTube channel, connect with us on our LinkedIn page, or visit our website at www.thephilomats.ltd. Ciao, ciao.